Hi, Anouk and Louis. Welcome at On Good Terms. On Good Terms is our new content platform for the Belgian venture capital ecosystem powered by Monarch Law. We're very happy and honored to have you here.
Happy to be here.
You both work for The Nest. Could you please present The Nest to us?
Yes, of course. The Nest is a single family office that started in 2021. We're specializing in 3 different sectors: food, agriculture, and sustainable real estate. We work on 5 different asset classes: venture capital, direct, funds, may it be VC funds, growth funds, buyout funds, third, buyouts, so direct stakes in companies between 200 and 400 million euro equity value. And last one would be real estate, so joining real estate developers in specific projects, always with the sustainability mindset. And last, I said 5, last one would be our foundation, the Nest Foundation.
And what are your both roles at The Nest?
I'm investment manager. Louis and I started out together at the inception, together with Els and Laurent, the principals, to set this up. I cover mainly everything related to the food and ag part, whether it's foundation, early stage VC, funds, on the buyout side as well, so more thematically oriented, and then a part of the overall family office management as well. But that's more Louis' ball game.
I'm COO at The Nest, and I oversee the operations of the family office, not only on the VC side, but on all the different asset classes which I mentioned, on all fronts.
The Nest is not just another family office, right? You are an impact investor. What does that mean, impact investing?
Take up your definition.
Yeah, let me give you our definition. So impact investing is, first of all, investments that should provide positive financial returns, so market rate returns, where you can create a measurable impact. So impact can be measured, and where the services or product of the company has the intention to solve a social or environmental issue.
Thank you for that. Anouk, you said earlier, impact investing is a loaded term. It's good to hear your definition. I'm sure there are multiple definitions. I'd like to delve a bit more into that. What is impact for you, and how do you measure impact?
Well, the thing with impact is these days, that's why I said loaded term. These days, everybody uses it as a term of we're creating impact, but as to your point, what is impact, right? And how do you measure it? It's a discussion that we still have. It's an ongoing thing, and it'll evolve still in the future as well, because every time that you generate an impact, afterwards, when you've attained that milestone that you want to get to, the impact that you want to attain changes again, and maybe you need to adjust the measurements. But how we define it is, for us specifically, the impact is really related to the food system specifically. That's where we have identified what we want to do exactly, and the different points that are important to us. And so within those big buckets that Louis mentioned, within food and ag, working on a resilient food system is what we want to do. And our 3 buckets in that are environmental footprint, nutritional value, so quality of the food, and the farmer resiliency is what we call it, is that a farmer today has low margins, is struggling very often, is at the mercy of climate change. And so making sure that they have what they need and are more comfortable, more resilient.
And do you quantify that? Do you have a scorecard that you can use for different portfolio companies? How do you go about it?
Yeah, and so in those, every bucket, and that's why the little bit of the context to get to that point of the measurement is that you cannot measure if you don't have a broader spectrum, so to speak. And so that's what is important in impact investing, in our opinion, is that you need to limit the frame in which you want to operate, because then it helps you to drill down in kind of a funnel and say, look, this is what we measure. And so, for example, for the environmental part, it's easy between
Two brackets?
It's not brackets. How do you
No?
call it? It doesn't matter.
I thought it was brackets.
So the environmental footprint, today everybody talks about carbon emissions, but there's biodiversity. Biodiversity, how do you measure? Is it an earthworm? Is it a bird?
Is it soil?
Is it soil? That's where you get into the tricky situation. So what we have implemented today is that we use a software. The software is called Proof. No strings attached, but we searched a lot, so it might help people. That software enables us to make a survey that we send out to our portfolio companies. And it is very generic. We try to be as detailed as possible without having bureaucratic overload, because then, it's the purpose to generate impact, not to talk about it and measure it and then not do anything. And so we have carbon emissions, water usage, and then there's more qualitative measures, like how many farmers are you serving? What is we hope that at some point we will be able to say, like, how many dollars or euros have you been able to give to a farmer, and then go deeper and deeper as the space matures. But so we have established a questionnaire. I think it's 17 questions.
17 questions, yeah.
Super easy. Every quarter, the companies can go through it, fill it out, and at their best possible intention. What's the legal term for it? To your best abilities?
Yes.
Yes. And then we group that, and then it gives us a dashboard that our companies can also use, so that it serves them as well, and it's not just something to tap on our shoulders.
That's interesting. So it's not that there's an industry standard. It's you have your own definition and way of impact measurement, basically. Okay.
Well, there's different frameworks, and that's the interesting thing. That's why we went with Proof, is that they have integrated everything which is European frameworks, the Farm to Fork, United Nations Development Goals, the UN SDGs, so-called.
EU taxonomy.
There's the EU taxonomy, that's how it's called.
Yeah.
There's other frameworks from what is responsible investing, different things, and they have grouped it because there's different tools that work with just one framework. The thing is that then it doesn't become comparable, and then someone is measuring carbon equivalents in one tool and someone else is doing it in another framework, and that's the problem that we have today. What we thought is it's better to get going, do something, albeit imperfect. At least we have something that we're measuring, and we'll fine-tune the measurements along the way, because we can have the analysis paralysis and start identifying models that then is just an usine à gaz in French. I don't know whether you translate it in English.
Yeah. Okay, that's thank you. That's really interesting. And I'd like to talk also a bit about the relationship with the positive returns. Louis, you said we do want positive financial returns. What does that mean? I would imagine that you cannot set the same ambitions as any other investment fund in terms of financial return. Can you talk a bit more about that?
Yes, I think you can. You actually can. So we work on different scales of impact within the Nest. We concentrate within the impact investing on finance first investments, so market grade returns, where you would have the same returns as a traditional investment. Same market returns. We look at also within the impact investing at impact first investments, where impact has, I would say, a bit more importance than the financial returns. But still, we're looking at market grade returns. We give a few points of returns to have more impact, but it's still a positive, financially sustainable investment. Next to that, we also look at, I'm going to go to foundation, a bit more venture philanthropy, which is kind of, it's the same as investing, but there we'll be looking at returns. At least get back our capital and possibly have a 0 to 3% return on investment.
The idea is that everything graduates to the next level, right? Because then you generate the real impact. Is that you start with something that does not have a business model, but is absolutely necessary, and then as it matures, it starts to generate its impact. While the measurements change, the beginning, the company's KPIs or business measures are the same as its impact, because if they don't have any customers, it's not generating any impact. So 5 customers is 5 customers of impact. But then along the road, once you start generating returns, then the impact becomes how many farmers did you reach? How much soil have you improved? How much water have you saved? And so then it becomes more tangible.
So impact and return go hand in hand, basically, because you need, you want impact, but you need positive financial returns in order to keep generating and generate a larger impact.
Yeah.
Exactly, and a good example is what happened in last year, 22. On the listed space, we invest also on best-in-class ESG companies. I mean, companies that try and do good. And we noticed that our portfolio overperformed a traditional portfolio. Mm-hmm. So if you would take the same asset allocation, maybe equities, bonds, alternative investments, we compared those two with a common benchmark, which is MSCI, and we noticed that our performance was higher, actually way higher than traditional ones. So our companies were more resilient to the increasing interest rates, to what happened in Ukraine, to what happened in China, slower economy.
You mentioned Ukraine. Maybe that's a good bridge towards a talk about the current investment climate. I mean, we have rising interest rates or sky-high interest rates, at least people of our generation. We still have a high inflation. We have the war in Ukraine. I mean, the investment climate is cool, especially the venture capital climate since what happened with Silicon Valley Bank is very cool. What is your take on that? What is your view on the investment climate, and does it have an impact on your investment strategy?
On the latter question, no, it does not have any impact on our investment strategy. What happens though is, because everything cooled down a little bit, valuations have returned to more normal levels. The thing is that in the impact space, valuations have always had a little bit less of, a little bit of a discount compared to the general, at least in VC. Yeah. I don't know about the listed space much, but
same, likewise.
You have a discount because people are still skeptical about whether it can generate returns or not. What we look at is, do you have a business model where return and impact go hand in hand? And that is where we select to invest, because that is how it works. And then we have a philanthropy, the foundation, in order to be able to sacrifice the returns when there's something that really needs to be done in this market to, have a tipping point, generate something else, or generate awareness. And that the delta that we see in those valuations is something that today has calmed down. And so for us, it's cheaper to invest because we have the mandate of impact and that we invest for the very long term. We always used to joke it's like 100, 200 years ahead that we invest for. We don't really mind what is happening today. Of course, there's things that you do or don't do, but the listed space has much more impact of that than our direct portfolio.
Yeah, I still think that, on the venture capital side, startups take a bit more time to raise funds. You usually see flat rounds, sure, down rounds, which has impact on valuations. So I think today in our environment, it's good to have cash. As Anouk said, for us, it doesn't really have an impact on our strategy because we're a family office. We look in the very, very long term, and we have cash at hand. So cash is king, as we always say, and we can take our time. So, on my side, it does have an impact also on the buyout space. You see with the leverages and all the big Blackstone, and they also take more time. Yeah.
Also with early stage companies, you combine both direct investments and investment in funds as a limited partner in funds. How do you decide whether to make a direct investment in an early stage company or whether to invest in a fund?
So it can take a very long answer, but my short one would be that there's a lot of direct investments that are not VC backable because the time frames from the 7 to 10 years to maturity for a fund to be able to sell the company and make a return are not manageable. What if you invest in agroforestry? A tree takes longer than 7 to 10 years to grow. So the first cycle already takes you longer than what a fund would look for. So those companies are companies where we can really make a difference with a long-term approach and with just one LP technically that That is where we make the difference in our direct investments. And the second part would be everything which is related to more specific knowledge. For example, the whole tech space, artificial intelligence, cameras. There's a lot of things going on in aquaculture to measure and to monitor, but it requires computational biologists, it requires software engineers. If we need to recruit all of those people to be able to make a decent investment in that space, we would need many more deals in that one category, and it would the remainder of the impact would just stay afloat. So then in those very specialized deals, that's where we try to work with funds that have those teams on hand. The experience can function as an extension of the team and at the same time have the expertise. So why would we start from scratch? I mean, it's much quicker impact if we back them than if we start from zero.
And are you hands-off or hands-on LP?
I don't think that we're very
Depends.
hands-off in anything.
No.
I think we're hands-on in everything.
I would say, yeah.
I'd be surprised.
That's
No,
our,
it's just, I mean,
our
we want to help.
entrepreneurship mindset.
We want to help,
yeah.
and then where it's needed. And so in many of our funds, we're in the LP advisory committee, the LPAC. In other funds where the ticket is smaller because we just want to test the waters, see what's happening. It's not really our core. There we would probably be more hands-off, but if they need us or if we can be helpful, then I mean, we're available.
And that's what, I mean, at the Nest, what we look at is also our additionality in the investments that we do. So we always look at how we can help these companies. So we're always hands-on, also with the funds. Because being impact investor also, sometimes we take a bit more risk, and I don't know if you can call it risk, but we anchor first-time funds, which is something that is quite unusual in the family office space, which is more capital preservation. So yeah, we are, for me, very hands-on.
It's all about the mission. Also a loaded term or a term that for many might mean much or nothing is a theory of change. And theory of change is what in the impact space defines a little bit what your idea is of the better future, of the impact that you want to get to. So it's a theory of the change that you want to generate. And it's kind of a framework that you set up, which allows you to then drill down to those metrics to measure impact. What you would say, for example, our theory of change goes from what do we want to do high level? We want to build a more resilient food system. What does that entail? The 3 buckets that I mentioned earlier, environment, nutrition, farmers. And then that boils down to, okay, what does that mean in terms of topics? What type of capital do you need? What is a better future that you get to? And then it gives you an idea of what subtopics you can invest in. And that allows us to be very selective in our companies and to very quickly see, okay, is this something that fits the theory of change? And then start to look at the different points of that. And that also allows us to be experts in, or I mean, I don't want to call myself an expert, but to be very knowledgeable about what we want to do and help those companies bring their mission and their impact to life. And sometimes those companies need that, not because they cannot do it by themselves, but because the capital is more restricted for these type of companies. And so we give time, effort, money in order to be able to help them. And that's what our definition of a hands-on is, not that we want to mingle in everything.
So your mission is to steer towards a more resilient food system, and it's an interesting term, and intuitively, obviously, it gives an idea of what we're talking about, but I'd like to go a bit deeper into that. What's wrong with our food system?
You want to
Kind
take
of
this?
everything. Take it. You'll do it better than I do.
So the problem today, in a nutshell, is that we have developed a food system, or a food system has developed, in order to be able to have enough yield, meaning enough food to feed the world. At some point, there was not enough food, there was risk, people were hungry, and so we started cultivating crops very densely, one type of crop, maize, soy, one thing, and then optimizing those breeds for yield.
Something that was called the Green Revolution.
The Green Revolution.
Yeah.
Meaning that the type of maize, for example, that we cultivate today, if you look at Latin America, there's still hundreds of varieties of maize, but those have not been used or retained because the one that grew the quickest had the biggest fruits and has been optimized by breeding technologies or even genetic manipulation in the last years. Those are the ones that are now cultivated. And so we went from a very diverse food source and food system to a food system that basically relies on 4 crops for 80%, or the statistics, 60 or 80?
I think it was 80%.
80%, I think so too.
Yep.
But for 80% of our calories, rice, soy, maize, all of those. Wheat for the better, I don't need it anymore, so I always forget about it. But so that is, due to that, or thanks to that, we had enough calories, the population was able to grow, but at a cost to society, because everything related to the quality of the soil, around biodiversity that is respected, has been sacrificed for that yield. And so today what we have is that the soil does not have the richness in nutrients and in animals, bacteria, fungi, to feed the plants. And so it's the same thing. If we eat only bread, we are going to be sick because we lack nutrients from potatoes or from vegetables and fruit. Same thing for the soil. If the soil only gets potassium, natrium, natrium?
Yeah.
No, it's not natrium. Natrium?
Yeah.
Well, doesn't matter. Yeah, okay,
Yeah,
good.
natrium.
It sounded so weird in my head.
Nitrogen.
Nitrogen, that's the one. I knew it was something. Nitrogen and potassium. So if you only feed them those 3 ingredients, at some point your plants are also less nutrient dense. Plus a lot of other things. We need to take away trees to go and cultivate other things.
So that's the problem.
That's a problem.
How to fix it?
Well, that's what we're trying to figure out. I think today we have a lot of solutions on hand. We are not the extremists saying we need to go back to the romantic farming, everyone in their back garden that we had before, because there's lots of advantages to how we have started to cultivate food. Yeah. What we're saying is we need to go to a more mindful way of producing food, where you need bulk production for massive calories, but where a lot of those things you can do with a lesser cost to society and to the environment. We don't need the chemicals that we use today. Those chemicals can be replaced by natural sources. For example, seaweed is a very good fertilizer. The water that comes out of the seaweed can be used as fertilizer, and so all of those things can be fixed.
And how important is technology in that regard?
It is important, but it's it helps you in a way today have a better yield. Do more with less. That is positive, but in the other way, I think we should, and we in the ag space and food space, have to look at low tech also types of investments. So tech is important, but it's not tech that will bring us to the next step. It will help. It will help the transition.
Okay. Yeah.
What we always say is we got into the situation because of man-made problems, and so we don't have the, I want to say arrogancy, but it sounds very negative to people who do believe that, which I respect. But we don't think that humans will be able to solve a problem that we ourselves created. So our take is that nature knows how this functions. Nature does what it does best. And so why don't we go back to nature-based solutions, but enhance them with the technology that we have today? Because with cameras, drones, artificial intelligence, you can be much more effective and much more precise.
Productive.
And so the productiveness of it goes up.
Yeah, you have to work with nature, not against nature.
In Belgium, because at the Nest, you have a very international focus, an international team as well, international mindset. In Belgium, you're still, the impact investment scene is still not as mature, I would say. There are a few players who've been there, who've been around for a while, but not that much. And also the view that you're portraying, your view on regenerative agriculture, is something that is not fully integrated yet. We're in Belgium, and we're in a full nitrogen crisis, at least on a political level. And many farmers struggle with, because there seems to be unsurmountable tensions or conflict between nature, agriculture, and the economy. What is your take on that? Is the issue as complex as it looks?
It is very complex. and I need to be careful what I say because it's a very loaded discussion. So I'm only speaking for my own opinion and how we look at it, but we respect others' opinions, and we think there's just not enough debate around it. Debate in the sense of constructive debate. What we have is that there's very compartmentalized decision making, and nature departments have difficulty reaching agriculture departments, and everyone has their own backing and fans and talents, and they have difficulty merging the outcomes that they want to get to. They work in silos.
Yeah.
And so our take is, as a new player in the field, technically, because we're just 2.5 years in, what we want to do is we want to reopen, like, is this really necessary to just focus on one thing only? I mean, why can't we merge nature with farming? I mean, the perfect example is silvopasture. Silvopasture means integrating trees in fields where cows are grazing. And so, as such, you get more shade for the cow. The cow produces more milk because it sweats less, so it can go put more energy into milk production. I mean, it's as simple as that. And so and then you can use the trees to have, I don't know, hazelnuts or chestnuts, so they can even give you extra yield. It diversifies the income stream for the farmer, and so the farmer is not dependent on the milk market alone, but can have other parts. The problem there is supply chain is not adjusted for that. And so if all these different departments would speak more towards, okay, how can we go to a win-win situation instead of, no, I need my dairy, no, I need my nature. It doesn't need to be one or the other. We believe strongly that it can be both, and that it would enhance and be a better solution even, a 1 + 1 = 3, rather than the situation that we have today.
Yeah, as Anouk says, we feel like it's all about awareness, and what we've done at the Nest last year, we acquired a farm called Domaine de Gros, which is in Dhont, where we want to do exactly that. So the farm has been farmed for about 10 years in the organic and regenerative practices. And what we want to do is showcase and show that it works, and that it's also, again, it's not just working, it's financially sustainable for the farmers. Because it is, again, it is very extreme, and it is very difficult for the farmers to transition to more regenerative practices, because they have approximately 1 harvest per year. They have very little cash flow, so they can't afford to miss that harvest because their income, their family depends on it. So we want to show that it can be done, but it will only be able, we'll be able to do it if we do it all together, so private and public together.
I mean, the amount of capital you need to finance that transition, and as Louis says, if a farmer wants to switch towards organic, he needs 3 years in order to get to a soil that is valid to certify organic. So those first 3 years, he takes all the risk, all the extra cost, but he doesn't get the price for his produce at the organic prices. So those 3 years, they're at the law of mercy. And so if people like us, but also the big banks, big investment banks, and all of those, if they can help put money at the disposal of those farmers, after 3 years, a farmer is much more resilient because the soil will be better, will absorb better water, and it's actually, and that to the portfolio analysis that analogy that you made earlier, is that those investments are much more resilient for the climate change that we're facing today and don't add to the burden. So there's win-wins. It's not easy. There's a lot of solutions, and it's from a theoretical perspective and from a, sometimes we say we need to be a little bit naive in order to embark on this journey. And so what we need to do is just make sure that we have the role play, the role models, that we see who does what, that we have a few examples, and that's what we're doing with De Gros, to then be able to say, look, this is a process that works. It needs to be adjusted for crops, for regions, etc. But let's try to enhance it and support and say. Yeah.
Wow, it must be really fulfilling to work day in, day out on making our planet a better place, right?
It is for sure.
In the last part of this interview, I would like to focus a bit on fundraising. Also, part of the public we're aiming at are the startups themselves, seeking funds, and it would be great to get your view, your advice on that. And one of the questions we get a lot by companies is, how much should I raise? Do you have any particular views on that?
I'm always a fan of not raising too much. I don't know I had an analogy that always came to mind, but it slips my mind now. The thing is that if you have too much cash on hand, you're not disciplined anymore. Or you're less disciplined, let's say it that way. Depends on people. So it's always, what we say is it's better to raise, let's say, what you need for your business plan in the next 2-3 years, and then take a margin of 10, 20, 30%, depending on how big you want to go. The problem is that if you would need 10 million, for example, to bridge that, and your valuation, if it's not high enough, you as a founder will give up a lot of the equity. And so that's something in Belgium, we see a lot of creative solutions around that with types of loans or subsidies, etc. Abroad, that's not the case. It's just valuation equity. You do it and you go. So I would say be disciplined around what you need, and yeah, raise quicker, but then again comes macroeconomic conditions where it's not always that easy. So you need the buffers, but even if you would like to raise bigger rounds, I would always be wary of it and be disciplined. Yeah, which is not always that easy though.
Louis, you have any advice for startups who are fundraising?
I think what is important is, as Anouk said, is it's not about the amount, it's about your plan, your business plan, your milestones that you want to achieve. What we see less and less today is companies that have milestones but can't achieve them, and then you really have a problem with your valuation, because you have to do bridge rounds, also down rounds. Yeah. There you go. I think what is important is to make sure that you really have your strategic plan set, milestones, and concentrate on that. So be very focused on what you want to do.
Yes. Okay. Are there some parameters that you particularly look at when reflecting on an investment decision?
Team, exactly.
Yeah. Team first and foremost.
Team, of
course. Especially actually not only in the venture, everywhere.
Everywhere.
Every asset class. We look at teams.
For us, every investment that we make, how small or how big it is, needs to pass a sniff test. Mine is, can I stand a flight to San Francisco with them out of Brussels and back, right? It's like, is this a person that I want to spend time with? Because for us, we're marrying for the long term. We want to help them. We want to collaborate with them. We have a same mission. And I mean, there's a personal angle to that. I mean, there's people that are doing great things, but where there's less of a people fit, or where the teams that we invest in do not rotate as well, or are not oiled.
And also, like you said, Anouk, and in the VC venture capital space, you have a lot of ups and downs, many downs, and you need to have a good fit with the team because, the objective is for us to help them. Oversee these overcome these downs, and it's important that you have a good fit with the team.
Yeah. Okay. It's a bit dangerous maybe, but or stereotypical, but I would think that in your space, impact investing, that it's not always easy to find a team that has both the vision and is generally motivated by impact creation and combines that with hard financial economic skills or managerial skills that are necessary to build a successful company. Is that something that you are that you are encountering, or is that a completely wrong stereotype that I'm having?
It's not the case anymore. One of the points that we always said was we want to professionalize the philanthropy space, and we want to philanthropize the investment space, where you kind of bridge the two. And what we see, luckily today, and what we're trying to enforce even more, is that people from hardcore finance backgrounds go into small startups that are doing something around agriculture, and farmers that are actually people from farming families that have done financing studies or something else, and then go into the corporate worlds in order to bridge those two. And the most beautiful example I find is One of our foundational supports is a cooperative that is bridging between farmers to help them transition.
Farm for Good.
Farm for Good. Farm for Good has attracted a rock star from banking, who was a private banker, who is now managing the cooperative. And so that is with hardcore financial discipline, with the mindset of banking, but bringing it to a small entity that is growing, that will, in our hope, be the Frontera of regenerative farming. Frontera is a very big cooperative in New Zealand dairy. And so having those people come over is very important. And we see that more and more, that people are sacrificing salaries a little bit for the mission, but we hope that we can level the playing field as well, and that there doesn't need to be a financial sacrifice, because it's end-to-end for everyone. And if you internalize all the impact that you do, you take that into account in the whole equation, then the financial part is only a small one.
Yeah, when speaking about philanthropy, I think it would be interesting to come back to the Nest Foundation that you were referring to. Louis, can you tell something about that?
So, foundation at the Nest, we concentrate on local anchorage, so mainly in Belgium, on building communities, especially in the food space, food and ag space, on the regenerative parts of agriculture. We've already sponsored, I don't know if you can say sponsored, but financed.
Supported
4 initiatives, going back to what Anouk was saying, Farm for Good being one of them, helping farmers transition from conventional to more regenerative practices. We'll concentrate mainly on the agriculture space in Belgium.
Else's, so Elster Mota, our principal, her idea when she launched the family office was there needs to be food and ag, because it's a passion. It's a highly polluting space currently if you look at the emissions, and there needs to be a do-good part to it. Apart from the impact where it's about investing, there's also part of our mission that is just not about financial returns, because how are you going to quantify education? How are you going to quantify awareness generation? And so those things are the core of the foundation. Now, awareness generation, education, those aspects, we're focusing currently on the food and ag part, as what Louis said, and most of all in Belgium, but then looking apart from that, I mean, there's some initiatives in the US, but then it's rather about, okay, how can we learn about that and then bring it to Europe? Or how can there be mutual exchange with things that are going on here? Documentaries. There's a documentary, Eat More Trees, about awareness generation so that people eat more perennial crops that are not harvested, they don't touch the soil, and so everything can be untouched there.
I'm very excited about the documentary Eat More Trees. I read about it, and it's supposed to come out in spring 24, right? About food forestry, and very much looking forward to that.
Us too.
To finish off, I have two questions. One is, you look and you are very professional. I mean, you address things in a very professional way. What is the difference between a typical venture capital or the typical investment firm, because you're not only doing venture capital, obviously, a typical investment firm and a family office, other than maybe the closed-end fund part? Are there any differences in approach that?
Of course there are. What I would say first, similarity between the fund and ours and the Nest Family Office is our focus. So we really know in which types of sectors, companies, stages we want to invest in. So we make it as professional as possible, like a fund would do, like a closed-end fund would do, or an evergreen fund. What makes it different is, what I would say first and foremost is long-term. We like Anouk was saying, a company that is doing agroforestry, you can't look at only at 10 years time, like a closed-end fund would do. We look at 20, even 100 years ahead of us. Since we're a family office, there'll be next generation, and that makes us very different than any other funds. I would say.
Yeah, and to highlight, I mean, there's as many strategies for family offices as there's family offices. So it relates to the principle and what he or she had in mind. And what speaks to Els is that she has this visionary approach to setting up her family office and running it with a very clear definition and very disciplined, but at the same time, always questioning, is this still the right approach? Are we still doing what we need to do? Are we still attaining the big level goal? And in that comparison, we don't have anyone to justify to what we're doing, because the family office decides. I mean, Els decides, and we execute accordingly. We don't need to raise external capital, so there's no push from LPs steering you towards certain goals.
Yep.
But I think that the main difference between us and other family offices or some family offices is that we are very, very afgeleend.
Focused.
Yeah, focused. There's no. There's little family offices. A lot of family offices go more around, okay, there's a financial return requirement, and there's a passion from the founder.
Not so much of an investment focus or a sector focus.
No, it's really, look, we want to do things that generate us 15% a year. And for us, it's really sector focused, impact mission first and foremost. And then of course we have financial returns per class that we invest in that give you a blended return requirement that we need to get to.
It sounds, it sounds as if, and I know for a fact that Els and Nora are very, very passionate about the nest, very passionate about this project. And are they also still very much involved in your daily activities?
Yes, they are. Els is very into food and ag on a daily basis. She's also very active with her family company. And Laurent is also more on the real estate space, also very active. Yeah. I mean, we see them daily.
Yeah, and that's what makes it fun, because technically the moment that we started collaborating with them, you work with the people. And so the cool thing is that we help them build this, and it grew massively over the last 2.5 years. I mean, much quicker than even us anticipated. Yeah. And having that together with them makes it easy also from a decision perspective, because Els and Laurent are involved on a daily basis. We have weekly team meetings, deal flow, due diligences are discussed on a weekly basis. So it helps to be quick in decision making, which for VC specifically is something important. And maybe that as a small part to the question that you asked earlier, yeah. Funds operate like that, but family offices don't. And so very often family offices and VC decision making do not match, because it takes you a month, 2 months before that the family comes together or the investment committee comes together, and that works for buyout due diligences. But a VC, if you wait 3 weeks, the deal might be gone. And so that's
agility. You're a very tight, dynamic, and agile team, basically. Yeah. Okay. Well, thank you very much. I very much loved the interview, and I'm sure you, with some viewers, you sparked an interest in the way towards resilient food systems. Do you have any? And I'm really gonna end with that question. But do you have any reading advice for dummies wanting to know more about regenerative agriculture or food system?
Yeah, of course. On my side, I have one book called Dirt to Soil from Gabe Brown, which I strongly advise, which I read when we acquired Domaine de Gros, which is very, very interesting. Explains how you can transition your farm from conventional farming to more regenerative / agroecological practices.
Okay. Dirt to Soil.
Dirt to Soil from Gabe Brown.
Great.
I have a full list.
One is enough for now, but we can add the list under the video.
No, I think if I would recommend one book, it would be What Your Food Ate. That speaks to the relationship exactly to the practices that help you get more nutritional food, and where us as consumers, we can, at our level, make decisions to stimulate a more resilient food system by just choosing what we eat, where we buy, and how we consume.
we have the key in hand.
Yeah.
We
yeah,
do.
We do.
Okay. Thank you very much. I
Thank you,
love
Maxime.
talking
Thank
to
you.
you.
Likewise.